Hey everyone! Welcome back to Play and Rewind Media. Today we're diving into a crucial topic that affects almost everyone at some point in their lives: credit scores. Whether you're applying for a loan, renting an apartment, or even looking for a job, your credit score plays a huge role. But what exactly is a credit score? How does it work? And how can you improve it? Let's break it all down. Before diving into the details, if you are new to the channel, please subscribe and embark on a journey of discovery with us. Hit the notification bell so you never miss a moment of our exciting content. So, what is a credit score? In simple terms, a credit score is a number that represents your credit worthiness. Basically, how reliable you are at managing and repaying borrowed money. Credit scores are generated by credit reporting agencies. In the US, there are three major ones: Equifax, Experian, and TransUnion. Each of these agencies collects information about your credit history from various sources like banks, credit card companies, and other lenders. Now, let's talk about how these scores are measured. Credit scores typically range from 300 to 850. Here's a quick breakdown. Excellent, 750 and above. You're seen as a low-risk borrower and are likely to get the best interest rates. Good, 700 to 749. You're in a solid position and should still receive favorable terms. Fair, 650 to 699. You might get approved, but you could face higher interest rates. Poor, 600 to 649. You might struggle to get credit or face high rates. Very poor, below 600. You may have a hard time getting approved for new credit or loans. But what goes into these scores? The FICO score, one of the most commonly used, takes into account 5 main factors. First, payment history, which makes up 35% of your score. This is the record of your on-time and late payments. The better your payment history, the higher your score. Next, credit utilization at 30%. This is the ratio of your credit card balances to your credit limits. Lower utilization is better. Then, we have length of credit history, which accounts for 15%. The longer you've had credit accounts, the better it is for your score. Another factor is types of credit in use, making up 10%. Having a mix of credit accounts, like credit cards and loans, can boost your score. Lastly, there's new credit, also at 10%. Applying for new credit accounts can temporarily decrease your score, especially if you have multiple inquiries in a short period. All right, now let's talk about what's considered a good credit score and how you can improve yours. First, pay your bills on time. This is the most significant factor affecting your score. Set reminders or automate payments if needed. Next, reduce credit card balances. Aim to use less than 30% of your available credit. Paying down high balances can have a quick positive impact. Also, avoid opening too many new accounts. Each new credit inquiry can slightly decrease your score, so only apply for new credit when necessary. Another tip is to keep old accounts open. The longer your credit history, the better. Even if you don't use old accounts often, keeping them open can benefit your score. Monitor your credit reports regularly for errors or fraudulent activity. You can get a free report from each of the major credit bureaus once a year. Diversify your credit by having a mix of credit types, like credit cards, a mortgage, and an auto loan. Just be sure you can handle the payments. Settle any outstanding debts. If you have collections or overdue accounts, work on settling or negotiating them. This can improve your credit standing over time. Lastly, don't close old accounts. Even if you don't use them, keeping old accounts can positively impact your credit history length and utilization ratio. To sum it up, understanding your credit score and how to manage it is essential for financial health. It affects your ability to get loans, rent an apartment, and even get certain jobs. By keeping track of your credit report, paying your bills on time, and managing your credit wisely, you can build and maintain a healthy credit score. If you found this video helpful, don't forget to hit that like button and subscribe for more tips on personal finance and more. Drop your questions or comments below. We'd love to hear from you. Thanks for watching, and we'll see you next time.